Market sentiment can make or break your trades. Here's how to stay ahead. Listen, what is sentiment? Maybe you've seen this online, maybe you haven't, like that fear and greed meter. You'll kind of see it go back and forth and you kind of wonder what that means. Well, at the end of the day, when we're talking about fear and greed, really has to do with confidence of traders. I mean that index is kind of handy. You might have heard of the VIX and stuff like that. But the best way to define it in kind of layman's terms is how confident are people? Are people willing to just bid up stocks, buy with no fear? Or is it the other end of the spectrum and they're like, hey, what's going on here? Sell, get me out. I don't want to hold this stock. I'm afraid of what's going to happen, etc. So that's really what we're looking at. And really it's bullish and bearishness. You've heard that as well. When you hear bullishness, that's that raging bull, as they say, and the bear is kind of sleepy and in his cave, So there's a lot of way to kind of measure that. One of the best ways is just using the index, as I mentioned, the S&P 500, okay? If you look at the 100-year history of the S&P 500, you'll see it's basically trending up, but there's a lot of scary pullbacks through there. Those scary pullbacks are where the fear comes in. Now, the way we use that is, if you're long bias, you're much more aggressive when the S&P 500 is green on the day, the week, the month. We don't typically look much further back when it comes to short-term trading. But if you're coming into day trade in the morning, markets are gapping up big. Maybe you're looking at the futures the night before, you're seeing CNBC and futures up 300 points. That tells you you're probably going to get a little more aggressive on the long side. Now, what's great about day trading is we really don't have a directional bias. We'll go long if it's time to go long. We'll go short if it's time to go short. One of my one of my favorite quotes from one of my favorite traders of all time, Jesse Livermore. Definitely check out Jesse if you've never studied him. But I'm a fisherman as well, so one of my favorite quotes of his, there's a time to go long, there's a time to go short, and there's a time to go fishing. And he's really talking about market sentiment. Like, is the market really frothy and bullish? Let's go long. Is there a lot of fear in the markets? Let's go short. And if the indexes are just kind of sideways doing nothing, well, then it's just a day to take off the day because there's probably not going to be any big moves to the upside or downside. So we use the S&P 500. A lot of people use the Dow Jones. I'm not against that. The thing is, the S&P 500 is 500 stocks. The Dow is only 30 stocks. So I lean towards the S&P, but they kind of trend together. VIX, another good index, okay? Depending on where volatility is and where the fear and greed is, you kind of follow that trend. And, again, another kind of corny analogy, but I think it works in this instance, is rowing upstream versus rowing downstream, okay? You can row against the market trend. You can row upstream, but a lot more work, a lot more stress, etc. Vice versa, you can kind of join that trend, and that trend may be down or up, and it gets a little easier, okay? And trading's never easier, but you want to join that trend. Other ways we do it, social media. There's pros and cons to social media. A lot of pumpers, a lot of bashers, a lot of that. But there's a lot of great accounts out there that will kind of get you up to date on the day, particularly Twitter. All the other sites are worthless, but Twitter, I follow some great accounts from some big name guys that have been trading for years that really just kind of give no BS stuff and will guide you kind of so that you don't have to read all that news. So there is value to social media to a certain extent. Follow prominent accounts with long-term track records. Don't follow some weirdo with a cartoon character as his profile, okay? But you can get a lot of good read from social media. You just got to be very good in your editing and your skepticism, a lot of stuff out there. But I do use it, especially early in the morning. At night, I'm kind of like, hey, what are these guys talking about? What are some news events that maybe I missed that could be affecting overall markets? Is there some conflict overseas, or is there some Fed decision coming up the next day? There is value in that. So that's kind of the biggest things we use. And then your scans, okay? Hopefully all of you have StocksToTrade. If you don't, you should have it. But, I run a bunch of different scans through the day, looking for hot sectors, looking for trends. And, a scan that I really love that's in StocksToTrade is what's called the high-low scanner, okay? Actually really handy. And if you see it, you'll notice that it's showing you basically the number of stocks hitting new high a day, as well as hitting new 52-week high in high price range, mid price range, and then small caps. So we've got 3 bars representing that. And it's really handy because it's kind of divided between a bearish side and a bullish side. So what I love to see, from a long perspective, like what am I going to do today? There's a lot of days when all 3 of those bars are pushed all the way to the right, showing that low price, mid price, and high price stocks are very strong that day. You'll see all the stocks that are breaking out and the number of times they broke out. So some days it's kind of mixed. You'll kind of see like 50-50 and then just a few stocks making new lows and making new highs. That kind of tells me, okay, maybe today's the day to go fishing. When I come in and I launch that thing and everything's pressing green and bunch of stocks breaking out across all price ranges, now it's time to get aggressive on the long side. Vice versa, if it's skewed to the red side, everything's leaning bearish, bunch of stocks making new lows, nothing breaking out. That's you make the decision of if you're only a long-based trader, which a lot of you are, short selling is great, but you need some experience. Those are the days you're like, well, I'm not going anywhere near this. I'm going to preserve my capital. I'm going to stay in cash, and I'm just going to wait for that trend to shift. Now, vice versa, I know some of you might be more advanced and trade, long and short. That's when you're like, man, I'm going to hammer any pop today because there's a lot of fear in the market. So it's a great real-world tool and real-world example of allowing you to kind of guide yourself through those trades so that you're not rowing upstream, you're not fighting the trend. I know I've dropped about 4 quotes this video, but you've heard the trend is your friend. Whether you're long, short, or undecided, you should be joining that trend because all 3 are valid at the end of the day. We go long when the market's bullish, we go short when the market's bearish, and staying in cash, as the wise old quote says, is a position. Like you don't want to use up your trading capital in non-ideal setups, especially if you're under the PDT. I know a lot of you might be under the pattern day trader rule. What you need to do, especially if you're under that right now, is last thing you want to do is trade a sideways market because now you're using one of your crucial 3 trades a week in a undecided market. I mean, even if you make money, you make single digit %, and now maybe that's your last day trade and you're shut down for 3 or 4 days till you get your day trades back. And then even if you have a cash account, listen, you have to trade with your cash. If you use up all your settled cash, now you're on the sideline till the next day or maybe the second day, depending on your broker. So it's really important to know the trend so that you're not wasting your time, wasting your trades, wasting your cash, and you're only trading the right trend at the right time. So in closing, do you use any of these tools? Do you track the S&P, the VIX, Bitcoin? Bitcoin's a great trend if you're a crypto trader. I mean, typically, even if you don't trade Bitcoin, if Bitcoin's strong that day, you're going to see all the other coins follow it. If Bitcoin's gapping down and falling apart, you're going to see all those other coins you might be day trading follow that as well. So even if you don't trade the S&P, even if you don't trade Bitcoin, even if you don't trade the VIX, there's value there. And as I mentioned, there are some good accounts, though few, on Twitter, aka X, to follow. So let me know, have you been doing that stuff? And I mentioned the high-low ticker, okay? The high-low ticker, just a great tool that's built into StocksToTrade. If you've never checked out StocksToTrade, hit the link below. You can get a trial, check it all out. You can use all the features. The cool thing about the trial of StocksToTrade, you get everything. Try it out, see if it works for you, and I'll see you on the next video.